Many investors are worried about the risk of a bear market, and it is for this reason that the PSG Wealth research team developed an indicator to measure this risk. And here to tell us more is Chief Investment Officer of PSG Wealth, Adriaan Pask. Adriaan, thank you for joining us.
Thanks, Holly.
Please talk us through the indicator. Why did PSG decide to build a bear market risk indicator?
Obviously, bear markets can be quite detrimental to the wealth of investors. So it's important to understand how they function, how they work, and how likely it is that one might occur. So you can already see in mainstream media, there's a lot more talk about the potential for a bear market, especially in the US, given that the extent of the recovery has been prolonged and is getting a bit long in the tooth. Part of the responsibility that's given to us in terms of making sure that clients' capital is allocated properly is for us as a team to consider these factors in our processes. There's a very robust process behind this in making sure that we know what's going on, have a good sense of where markets are going, and then adjusting portfolios accordingly.
So what causes a bear market? Can you identify typical indicators?
So there's multiple factors that you could look at. So in terms of fundamental analysis, we would look at valuations and we would look at earnings of US corporates specifically. On the technical side, we would look at momentum, so how many companies are making new highs and lows, those type of things would factor in there. On sentiment surveys, it's purely just a test of what the general thinking is in different market areas between institutional and retail investors, what each of those groupings are doing and how much weight we would want to give to each of those. And then lastly, on the macroeconomic side, which is probably the more common side, that's covered quite often. So there you would find factors like GDP, the output gap in GDP, inflation and yield curves and those type of factors on a macroeconomic level.
And which indicator do you think is more important?
Between the yield curve and the output gap, those are two things that we're particularly sensitive to at the moment. Typically what a yield curve should be doing over time is have a slope upwards, to mean that if you've got short-term deposits, the rates would be typically lower as what it would be for longer-term deposits. But what we're seeing at the moment is a drastic flattening off of the US yield curve. So that means that the Fed has been increasing rates on the short side and rates on the long end are remaining low. That output gap essentially measures the difference between the existing GDP growth in the economy versus its potential. So what you would like to see is at a natural health, the GDP, the actual GDP numbers are moving towards that potential growth that it could actually sustain. But what we're seeing at the moment is that the actual GDP numbers are running ahead of the potential GDP numbers, which means that potentially these economies could be overheating as they're growing so quickly.
How can investors survive a bear market?
I think investors need to find comfort in the fact that we're spending a lot of time looking at these factors. We've got the right skill sets in the business. We've got people who are familiar with financial modeling, economics, investments, and we spend a lot of time building models to make sure that we are proactive in understanding how these potential risks could occur and what the likely impact is on not only equities but a whole range of asset classes and our products that we introduce. It is notoriously difficult to try and predict these things very accurately, especially on a very close timeline. So I think the best advice that I could give is to make sure that you've got a diversified portfolio of assets and leave it up to the professionals to really navigate their way through these tough times.
Well, there you have it. Predicting a bear market can be a complicated exercise. For more information on how to mitigate this risk, visit our website.